A historic ending is coming to the Bitcoin and S&P bear markets. This is the first time we've seen this signal since the all-time highs. So let's take a look at that in today's video, looking at how this volatility signal is letting us know that the end is near and peace will be restored to the markets and the media. Before we get there, smash that like, subscribe to the channel, bell notification icon, and no YouTube video is complete without talking about the links in the top of the video description, our free crypto and economic report emailed to you once every 2 weeks. And for the Aussies, limited time, there's double free Bitcoin when you sign up using the SwiftX links in this description. Anyone else looking for a crypto exchange? BitGet, huge sign up bonuses and free USDT just for depositing. That's all. All right, let's have a look at the VIX index right now. So this is the index that lets us know how volatile the SP500 is. Typically, when the VIX spikes to higher prices, that is typically lows on the S&P 500. When it drops down, hits some bottoms here, like you can see plenty of times throughout the bull market and the bear market, that's typically some tops on the S&P. So we get lower prices here, that's tops on the S&P, but also, sustained moves within trading ranges typically show signs of bull markets, and they can be bull markets of 12 months or several years. And right now, we're starting to see something very, very important on the VIX, and it's what we've been covering here. Major things, lower tops, meaning that the volatility is drying up in the S&P, but we're starting to lean more towards the bullish side. And what we've just seen is a really clear breakdown of the support levels. Now, we're drawing our support levels like pros, not just any old amateur random line. What I'm doing with the lines is connecting it to significant lows. And if you want to find out these significant lows, I use my TIA Gann swing indicator. Some people will just eyeball it and try and pick something, but I want to get significant levels. And if I want a higher time frame significant level to give me a better reading of the market and not something that's a little bit in between, I'll go to a higher time frame, look at my weekly chart, and then start to anchor the points there. So this can be the difference between looking at this as support or looking at this early on as a clear breakdown. And that's what I'm finding at the moment with the volatility index. Some are looking at this as, look, the VIX is on support, and typically what happens when the VIX is on support, it bounces to the upside. Sure, it can happen. But what we're trying to explain here is if we get a better, clearer reading on the market, it's going to give us a clearer understanding of what we could expect next with a higher probability of just drawing a line willy-nilly on the chart. So at the moment, we're seeing a breakdown. We've got 1 week that's closed underneath this level, and we're in our second week now. So we want to see this week close underneath, and that's the key point right here. We still have a few more days, so if this happened to bounce and then close back in this zone, sure, that was a top on the S&P, and we start to move the other way, which eventually just shows that maybe the S&P rolls over here a little bit. But don't forget, we've got some pretty clear lows that have been forming on the S&P. So the market needs to do a lot of work to the downside to break this down and get out of this bullish move to the upside. Remember, we're looking at the longer term timeframes here, not just the daily moves where it could be a few percent either way. So back to the volatility index at the moment. And basically, we've seen that support the entire way to the upside. And we've also just started to see the market consolidate to the downside. So basically, like this little indicator here is the VIX, when it goes up, basically the S&P going down. When the VIX is going down, which is what we're on at the moment, then the S&P is going up. And so this is the first time that we have broken under the 17 level. So I've been looking at the range, the trading range between 17 and 11 to give us a reading on the market to end the bear market. Remember, this happens over a period of time with multiple signals and indicators. This is just one of those. And at the moment, it hasn't done this since the absolute peak, the all-time high on the S&P going back to January 3rd, I believe is the all-time high. So we can take a look back here. You can see right at that peak there, around the third, fourth was bang on that top at 4,800 points. And so that was the last time the VIX was underneath 17, which basically ended that string of bull market run from the COVID crash low. Through that period of 2021, you can see we weren't beneath 17 all that much. However, that was another good time that the market was heading up. The VIX was under 17. Now, I want to take a look at a few indicators here going back over the previous bull markets. We just need to bring up the S&P right here. You can see that the VIX dropped under the 17 level right there. And this was a pretty decent time to gather profits in that run while the VIX was underneath 17. This is not a buy and sell indicator, buy when this drops underneath or sell when it goes above, nothing like that. But it's giving us a reading on the overall trend of the market. And that's done a pretty good job throughout 2019 and into the early part of 2020 before it got some higher lows, which then meant there might be some trouble. I have no idea that we're going to get that sort of trouble, but you could see that there was going to be a little bit of trouble because this started to get some higher lows. The same thing goes for the previous bull and bear markets. You can start to see it head up and the market start to roll over. So you know there's going to be some trouble. You just don't know what extent that's going to be, which is why we layer over multiple indicators within our own trading plans. So this was another clear time as well, going back to 2009. Market is heading up from the low in early 2009. So that's the orange line. And the VIX is dropping right off, just touching underneath 17. And that's the start of the mega bull market that headed all the way up into 2020. Yes, there were some pretty severe times to the downside through 2015 and through 2018 and 2019-ish to the end there, basically all of 2018. But that period on the way up, you can see just how much the VIX traded between 11 and 17 on the index here. And meanwhile, the market's basically heading up. Sure, there are some down times, but we're just looking overall here to give us a broad indication of the market sentiment and basically the direction of the market. And so that's what I'm talking about here today, this historic signal that's showing signs that the bear market is coming to an end and we're in the midst of a transitional period going from the bear to the bull. This doesn't mean straight up. Look what's happened in the past. You can see the orange line here as we head out. There are some significant pullbacks throughout that period. Meanwhile, the bears are thinking that we're about to get another collapse. This is going to be the psyche for probably 2023 and 2024. Okay, so keep that in mind. This goes over a period of time that it takes for the pendulum to swing from full-on bears to potentially full-on bulls. And when we get into that full-on bulls, it's probably going to be the end. We've still got some time till we get there. Going back again to the previous cycle, just looking at the 2003 lows, here are the prices, and you can see the VIX start to come down and then touch into the level, the trading range underneath 17. So between 17 and 11, it went beneath this level, stayed under there all the way to the top. We started to get that move to the upside as the market started to roll over. And that gave us a signal that there's going to be some pretty severe volatility coming into the market and probably to the downside. Remember, there's no guarantees. There's no 100% in this game. But we're starting to see some pretty good signals that it's probably likely the bears are running out of steam and they're about to be demolished. So that's a clean look at the VIX. You can see that this is where we currently are, the lowest reading we've had since the all-time high, since the top of the bull market cycle. Like I've said many times, the bears will have their day again, but it seems like the bears are basically done with, and they'll have to head back into hibernation at least for a few more years before they get their major turn again. Like I pointed out, there is going to be some ups and downs, just like what we've had in history, say in 2004. There was still uncertainty. 2010, there's still uncertainty. But it's at the beginning of those cycles that the uncertainty is there, and it will always be there because that's the beginning of cycles. People are deciding what end of the spectrum they're choosing to be on. As for the S&P, we've just hit a new 2023 closing price, a new high for the closing price, this time coming in at 4,176.75. So that's 3 days in a row now that we've had some nice upside. It is grinding hard at the moment, and of course there is the resistance levels. Overall, we're looking to the weeks and months. I see this going higher, but there has to be some pullbacks, and maybe we're coming up to that point at the moment, like I've talked about before. April, May, are looking like good periods to have pullbacks doesn't mean the major trend is finished. Okay, so we're looking at October, December low, and March low. Keep those in mind. If we have any sort of pullbacks, you can bet your bottom dollar the bears will be back out saying, you're wrong, the bulls, it was all just a bull trap, you guys are going to get screwed. That's only the case if these things get heavily taken out and the market consolidates under those levels and in this zone. That's bad for the bulls, and we'll have to change our perspective then. But for now, this is all to the upside. Now, before I get onto the US dollar and Bitcoin, I wanted to touch on the fear and greed index for the SP 500, so the stock market. Now, this fear and greed is up quite high. It's at 70, but it had a higher reading back in February when we saw this peak here. So we're coming up to that same peak now, except the greed is less. So we can work our way higher at these greed levels, providing the market remains somewhat balanced. If we have some quick pullbacks down into the 40s and the 50 zone just to get us back into the neutral, and we reset our emotions, the market sentiment, so that we can continue to grind higher. Otherwise, we go on a bit of a push, pump up harder, and then we have to have those pullbacks. Whenever we get to those peak areas, the volatility comes into the market sentiment, because you see a lot of people get run into the market and then they get flushed out, but then only to see the market go up again. So that's usually that end stage of at least a trend, maybe what we're coming into now. So I'm just keeping my eye on that as well. So back to the USD. Remember we talked about the top in September of 2022. All the biggest news headlines, buy US dollar strong, everything else is collapsing. If you don't remember that, just search Google, look at the headlines. It was wild. You had everyone talking about the US dollar and how strong it was. Now, the flip has happened, but personally, just from my own analysis, I don't think this is as strong as what it was at the top, but we are seeing a lot of fear into the US dollar, but it seems like it's starting to put in a bit of a low. US dollar collapsing, major countries leaving the US dollar, it's the headlines, everyone else is using different currencies to do international trade, so they're saying sell the US dollar. But what's happened over the last few weeks? It's basically put in a low at 102, another low at 105, and then again now at 100.8, 100.9, and it's starting to bounce from that point. So it's taken a while to slow this downside move, but it seems like it's happening again on extremely bad news. My overall picture for the US dollar is we were probably going to test some higher prices. Maybe it's 105, maybe it's 108, maybe it's only 103, which is the 50% level. Either way, the news has been very adamant about how bad things are for the US dollar right now, yet it's been very difficult for the price to get any lower. It's at the exact same price as it was back in mid-March, so almost 4 weeks ago. So it's the same psychology. You'll see all of the doomsdayers talking about how bad the US dollar is and that you've got to get out of it right this moment. I think overall, on a longer term time frame, we'll probably head back down over the coming years. But in the short term, with how negative the news is, and we're hitting some low prices, I think we're still due for a little bit more of a rally here. It could be over the days or weeks, but it's really just an example of how ridiculous the news is and how the market sentiment is almost exactly at those peaks. Speaking of market sentiment, time for cryptocurrency and Bitcoin. But before I head there, those links in the top of the video description, again, for our free crypto and economic report. Get on board with that, and you guys could get involved with our free crypto trading workshops. A lot of our traders here are making some really decent profits. Well done to you guys hitting those hundreds of a percent return. And even if they're not hundreds of a percent return, just those 40s and 30s, constant profits, always good for the portfolio. So to the crypto fear and greed index, we've talked about these levels coming up at around that 60 to 80 level in terms of the greed, which typically peaks out for a turn in the market. Like I said, there's going to be some volatility in the emotions when you get to those higher prices. That's always the case, especially if you haven't had enough time building a fundamental base. We've had a bit of time here, around 24 days in this zone before we started to break out and potentially hold above. But nonetheless, if this starts to shoot up quick, we can expect some quick drops to the downside as well. That greed can quickly swing into fear again, or at least come back to neutral to reset that market sentiment. So we're still waiting for that rejection at around between the 60 and 80. So call it around 70, which is what has happened in the past. If we break beyond it like it did last time, it really wasn't too long until there was an end to that peak. the breaking point from May was basically a month later. So the sentiment was able to continue pushing that market up for another month. Yes, with some wild swings in there, all the way down to fear, but then all the way back up until that run was basically over. So I think we're coming up to that point now, whether we got a couple of weeks left or a month. Let the market tell that story, but we're definitely coming up to that point soon. Let's see how much further Bitcoin's got from this point. The worst thing we want to see is the price of Bitcoin breaking back into this zone here. So I've got here price must stay out of this zone between 26,500 and roughly 29,000. That's because that's where the previous consolidation was. And if the price, or if the investors, the market participants, lose faith in the price at this point and they push it back into this zone, then that is weakness for Bitcoin. It's weakness for whichever asset that this signal happens on. But for now, we're sitting right on top of those levels. So nothing to be concerned about just yet. If the price starts to close in this zone, wicks are okay. If it closes in this zone, then we could expect further downside to come back and test the low at 26K. If that breaks down, then expect those prices at around $25,000. We're not there yet. It's just preparing for any of those sorts of things, especially if you see the price drop into this zone and you think now's a great time to be buying the dip. Just wait, because looking at this, it's not a good sign if you see it drop into the zone, like I just mentioned. What we want to see from this point though, holding support above 29, or at very least wicks just down to those tops of the candles at about 28,500, and then the push up for the rest of this move to the upside before eventually we do get that rollover, wherever that may be. The VIX is a super useful tool to identify when there is an end to a trend and when we're starting a new trend. And what we can see at the moment is that it looks like the bear market is ending for the SP 500. We've pointed that out many, many times before. This is just yet another signal to identify the end of that trend and the potential beginnings of a new trend. It's going to be shaky. It's going to be volatile. There's going to be times where this starts to jump back up because we have some pullbacks on the S&P. But overall, we have seen Bitcoin rise from the lows of 15K. Means risk is basically back into the markets. Investors are feeling more comfortable with investing their money again rather than leaving it in cash or bonds. And so we're starting to see that come back into the markets across the board. The only little headwind at this point is what happens with the US dollar, as we're seeing a slow in the decline for the USD. So we're going to keep tracking the US dollar, see whether this is able to hold 100.8 or get rejected over the coming days or weeks at around 103.5. See how that affects Bitcoin as it tries to hold $29,000. And of course, the S&P and the VIX, which is showing reasonable signs that we're pushing back into a bull market, and the bear market is coming to yet another end like it has done throughout history. 2019, classic example. 2009, another classic example, and 2003, yet another classic example of the VIX indicator. Thanks once again, guys. Like and subscribe if you haven't already. I'll see you guys at the next video or as a member in our trading workshops and TIA Premium. Cheers. Catch you in the next one. Till then, peace out.